Hey there, crypto family. Welcome back to another video where I'm bringing you some daily crypto news articles. Today's article comes from cryptobriefing.com, and prospects of global recession rise as inflation hits record 8.5%. So I guess the April CPI data shows that US annual inflation rate is at a 4-decade high of 8.5%. Yeah, I believe it's still higher. They're just trying to slowly roll that number up. But this is just a sign that the system is failing, it's colliding. It's time to make way for the new system because cryptocurrencies is the exit plan, and it's a way to save yourself from the rising inflation that's about to happen. So, key takeaways are according to today's CPI data, the US annual inflation rate has hit a 41-year high of 8.5%. The Fed is signaling resolve about tightening policy to curb the worst inflation in 4 decades, even at the expense of economic growth. Tightening policy could see the world enter a recession, which has historically fared poorly for risks on assets such as stocks and crypto. News of record high inflation rates in the US hit the streets today, according to April data from the US Bureau of Labor Statistics. The year on year consumer price index sits at a 40-year record of 8.5%, raising concerns over a potentially impending global recession, which could spell doom for risk on assets like stocks and crypto. Inflation hits the 4 decade high of 8.5%. The inflation numbers published today fall largely in line with economics expectations. According to the latest data published by the US Bureau of Labor Statistics today, the consumer price index increased by 1.2% on the month in March, placing the current annual inflation rate in the US at 8.5%, the highest since December 1981. Gasoline, food, and shelter indexes saw the highest increase in price. The Bureau said with the gasoline index rising 18.3% in March and accounting for over half of the CPI's increase, the energy index has risen 11% on the month, following a 3.5% increase in February. According to Reuters poll, the record high inflation rates have fallen mainly in line with economists' expectations, who anticipated the March CPI print to be 8.4%, only 10 basis points off the official print. A combination of factors, including surging energy and commodity prices following Russia's invasion of Ukraine, unprecedented money printing in response to the COVID pandemic, and supply chain issues caused by lockdowns in China, is widely believed to be the main culprit behind the rampant inflation. They combat the rising prices, which affect the bottom line of everyone, but especially that of lower income individuals. The Federal Reserve raised interest rates for the first time in 3 years. Last month, it also signaled plans to raise interest rates even seven more times, and potentially beginning aggressively unwinding its balance sheet by selling bonds and mortgage rates-backed securities back to the open markets by year's end. The process is known as quantitative tightening, and it aims to shrink the circulating money supply within the economy in order to curtail consumer demand and consequently contain the accelerating inflation. However, experts fear the tightening of the monetary policy amid increasing uncertain geopolitical and macroeconomic conditions could slow down the US economy and tip the world into a global recession. Historically, recessions or economic contractions have fared poorly for the risks on assets like growth technologies, stocks, and crypto. But according to the co-founder of the crypto exchange BitMEX, Arthur Hayes, crypto's high correlation with technology stocks means that both asset classes could slump together due to central banks beginning to tightening liquidity aggressively. In a Monday blog post, he revealed that the worsening macro conditions could see the two largest cryptocurrencies, Bitcoin and Ethereum, fall to $30,000 and $2,500 by June. I am a subscriber to Felix Zalouf's research. He is so on point. His general thesis is that the tightening of liquidity globally will lead to the deep short-term correction in global equities, he said. Today's CPI print seems to have been already priced in by the crypto market, which saw no noticeable spikes in Bitcoin and Ethereum prices. And at the time of writing, Bitcoin is trading at around $40,600. While Ethereum is changing hands for $3,070. Both cryptocurrencies have slumped around 12.7% over the last 7 days, following the Fed's announcement that it considered an aggressive quantitative tightening policy. So, yeah, A long article, but good one. And the price of Bitcoin, as me recording this video, is 39,500. So it's dipped into the $30,000 range again as a recording. But yeah, so that's a good article. Explained a little bit about how the recession will take place. Pretty much the tightening. We're seeing the increase happen. Banks trying to really be aggressive on the liquidity assets, and yeah, so good article. Long, but it was good. Now, do you guys think it's really at 8.5% right now for inflation? I don't think so. I still think they're hiding lots of information from us and just giving us lower numbers, trying to ease our way into it, but it's going to hit bad. So that's that article for you. If you liked it, hit that thumbs up, subscribe to the channel so you don't miss a beat. And until next time, the Crypto Sherpa is out.